Hi, I'm Tracy Sofra and welcome to the Women of Wealth podcast, dedicated to helping women achieve financial independence in every area of her life. Today, I'm going to share with you the ins and outs of a testamentary trust. That's a mouthful, isn't it? You may or may not have heard of a testamentary trust, and it is a trust like other trusts that you may have heard about or come into contact with whilst running your business, like a discretionary trust, which is one of the most common ways of operating a business out of. But a testamentary trust is a trust that's established through a will. So this is part of your estate planning. A testamentary trust cannot exist prior to the death of the individual. It takes effect after the testator, which is the person setting the will. So if it was myself, it would be after my death. And instead of the beneficiaries, so in any trust, let me step back a step. In any trust, this is a testamentary trust. In any trust, there are beneficiaries, the people who receive the benefits of the trust. There is a trustee who is in charge of running the trust. So a testamentary trust, instead of the beneficiaries receiving the assets directly from the estate in their own name, the assets go into the testamentary trust and it's controlled by an appointed individual known as the trustee. So as part of your estate planning, when you're speaking to your solicitor, you can ask about testamentary trusts, but essentially if they incorporate a testamentary trust as part of your will, it comes alive, if you like. It is established on death and all of the assets are called in. Again, this is based on your will and what you want to go into the testamentary trust. But if you want to call in all of your assets and pop them into the testamentary trust, they lie in that trust and they are not passed down to the individuals in their own name. And then that testamentary trust has a trustee that you appoint, a person you trust to make sure that that testamentary trust is controlled and managed in the most efficient way. And away they go. So the assets go into the testamentary trust. They are controlled by the trustee, and it allows for the protection and management of assets for the benefit of the beneficiaries. And I'm going to outline what those benefits are and provide examples for you. So it offers flexibility and control over the distribution. And the trust is managed by the trustee who acts according to the will's instructions. The will have instructions as to how that testamentary trust is to be managed. And it ensures that the assets are held and distributed as intended. So it is a way more controlled way of making sure your beneficiaries receive the assets in a way that is asset protected, tax efficient, and I'll go through each one of those in this podcast. But it is a more intended way of passing down assets to beneficiaries. But let me break down for you, and I want to make sure that this is very crystal clear and easy to digest as I speak through this, how it actually works. So first and foremost, the will is created, okay? And a testamentary trust is established within a will specifying the assets that are to be held in the will, the beneficiaries of that testamentary trust, and who the trustee will be. So when you go to see your solicitor and you discuss establishing or you discuss whether you want to have a testamentary trust, it will be established within the will specifying those things, the assets, the beneficiary, the trustee. All right, that'll be part of your will. On the death of the testator or the individual setting the will, upon the death, the will is probated. There always has to go through probate, and the assets specified in the will are transferred to the testamentary trust. So that would be step number 2. Step number 3, the trustee's role. Okay, the trustee who is named in the will takes legal ownership of the trust assets, and they are responsible for managing the trust. It's a huge responsibility, and you want to be sure who you're naming as your trustee. They have a huge responsibility in, first and foremost, making investment decisions, distributing income or capital to the beneficiaries according to the will's provisions. which the provisions are what has been stated in the will. Now, currently I am working through this for a client who passed away earlier this year. She was a long-time, beautiful client who has left behind 3 beautiful girls, and she has established a testamentary trust in her will. Her trustee has contacted me to say, Trace, I would like to work with you in terms of making the decisions of how to invest the funds. So the trustee has called in the assets. They are now sitting inside the testamentary trust. The beneficiaries are the 3 girls. She is the trustee, and her and I are working together on setting a plan and a strategy for the investment of those funds for those 3 young girls. It is a great way to manage those monies instead of passing it down directly to those girls. Being very, very young, you don't know what they could have done with the proceeds, whether they blow the money or whether they make good investment decisions or whether somebody else gets involved and makes bad investment decisions. This was their mother's way of protecting the funds, protecting the girls, and making sure that when they're of a certain legal age, and she has stipulated a certain age to which these funds will sit in the testamentary trust, and I think she's nominated, say, age 30 or something like that. And it will protect those funds until such time as they reach that age and they can access the whole lot. So it sounds complicated. It's quite simple in the way that it's set up, and I'm hoping I've been able to identify each one of those steps for you. But certainly speaking to a solicitor is definitely going to give you greater clarity around this, but I just want you to hear me out on some of the examples I'm going to share with you and how beneficial a testamentary trust can be. The beneficiaries' rights within this testamentary trust, they have the right to benefit of the trust. So that may include income, capital, or the right to live in a property, depending on the terms of the will. So if the terms of the will, say there is a property in the will and the terms of the will is if any of the girls want to live in that, it is expressly said that they can do that. You just got to follow the terms of the will, and you set those terms when you're speaking to your solicitor in setting up your will and incorporating that testamentary trust in there. Asset protection. The trust structure can offer protection for assets without a doubt, and that is one of the major reasons that we set up testamentary trusts, as they're not. So the assets are not directly owned by the beneficiaries, they're held by the trustee. And how can this be beneficial? It can be beneficial for example, vulnerable beneficiaries, those with debt, and those who may not be financially responsible. So it will protect all of those people. Let me give you an example. So consider a scenario, and this is the example of asset protection, how a testamentary trust can protect assets. Let me share with you a scenario. Let's assume your rich aunt leaves you $1 million. Wouldn't that be lovely? But your business, you're a business owner, is having trouble financially, and it looks as though you may declare bankruptcy. If you receive those monies directly, it would potentially be available to your creditors, meaning that your aunt's estate could be paying for your failed business. Now, nobody would want that, okay? So if that $1 million passed directly to you and you're in financial, disarray and you're about to go bankrupt, creditors can access those funds to extinguish those debts, and basically you end up with nothing. If this money was left to a testamentary trust, the money is not legally owned by you, and this would make it more difficult for creditors to get access to any lump sums from the estate. Can you see the difference and the benefit? Massive, massive differences there. So a way of asset protection is definitely something to consider. Also, tax implications. Now, a trust has its own tax file number, and it is required to lodge a tax return annually. However, the trust generally is not subject to tax if all of its annual income is distributed to the beneficiaries. So the beneficiaries, who are the people that are going to benefit from the trust, if it distributes the income to all of the beneficiaries in the testamentary trust, the beneficiaries pay the tax based on their marginal tax rates. Okay, the main tax benefit of having a testamentary trust is that beneficiaries under the age of 18 are taxed at adult rates than minors, than being on minor rates, and I'll explain that in a minute, on any income that's paid from the trust. You see, minors, they have penalty tax rates that apply to them on any unearned income. So if they're taxed as adults, their tax is minimised. Let me explain that a bit further. What happens is people in business and who are operating out of a trust structure, for example, they are able to only distribute $416 to their minor children to reduce the tax liability for everyone else. Anything above that is taxed at minor rates, which is the highest tax rate of 47% in the dollar. And so a testamentary trust extinguishes that and basically allows minors to be taxed at marginal tax rates rather than at the top tax rate. So it's a great way to reduce tax and to have tax benefits without a doubt. So if you've got minors who are under the age of 18, they get a distribution from a testamentary trust, they are taxed at marginal rates rather than the highest tax rate. So obviously that nobody wants to pay any more tax than they have to. So taxation is definitely minimised there. Let me give you an example of that one. Again, your aunt, she has recently passed away. Sorry to hear that. And her estate has $1 million in cash that she wishes to leave to you. You have a non-working spouse and 2 minor children. They're under the age of 18. If your earnings were over $190,000 a year, that puts you in the top marginal tax bracket, which is 47 cents in the dollar. It's 45 plus Medicare of 2. So if you received that inheritance directly and you invested it at, say, 5% per annum, you would earn $50,000 and you would pay $23,500 because you're in the top tax bracket. So anything above the 190, which would be the 50, would be taxed at 47 cents in the dollar. So you'd literally lose half in tax by doing that. But if instead your aunt left her assets to you by way of a testamentary trust, not directly in your name, but a testamentary trust with your family as beneficiaries, yeah? So not just you as the beneficiary, with your family as beneficiaries, the trust could invest the money because the monies would still be inside the trust. And the $50,000 earnings could be distributed equally to your spouse and 2 children. So that's 3 people. So in this case, each person receives about $16,667 of income. That's the $50,000 divided by 3, which is below the tax-free threshold of $18,200. So no tax payable. Okay. Therefore, by using a testamentary trust, the family can legally save that $23,500 for the year. Isn't that extraordinary, and why wouldn't you want to do that? So understanding asset protection, understanding minimisation of tax is incredibly powerful when thinking about setting up a testamentary trust as part of your estate planning and as part of your will. The other thing is controlling access to capital. So importantly, a testamentary trust lets the trustees choose when and how beneficiaries receive their estate proceeds. So another example would be if you needed $100,000 to repay your mortgage, the testamentary trust can be structured to allow capital distribution from the trust or even a loan from the trust. You could use this money to repay your mortgage, reducing the reliance on banks. The other piece to the puzzle here is trustee responsibilities. The trustee has the legal duty to act in the best interest of the beneficiaries. It is a huge responsibility, to be quite honest, and managing the trust assets prudently and fairly. They are also responsible for complying with tax obligations and other legal requirements. And in essence, a testamentary trust provides a mechanism for managing and distributing assets after death. it does offer a great amount of flexibility, control, and potential tax and asset protection benefits for all beneficiaries. It is something that is not commonly known or heard about throughout the course of my advising career. I have mentioned testamentary trusts on multiple occasions, and not a lot of people know about it. Not a lot of people know how beneficial it can be, again, from an asset protection and also from a tax benefit point of view. I was talking to another client the other day. They have 3 kids, and one of the kids is probably not going to be great with money and a bit of a vulnerable person, and they weren't, and she, the mother specifically said to me, Trace, it just doesn't feel right. I need to make sure that I can't leave that particular child out of the will. I want to give it to them evenly across the board, 1/3 each. What do I do? And a testamentary trust came to mind straight away. And I said, look, you could use a testamentary trust to help that particular individual, popping particularly maybe their part of the will. What is left to them in a testamentary trust to be managed on their behalf. Because let's face it, if people are vulnerable for whatever reason and not necessarily great with money, and literally once they get it, they're just going to blow it and it's going to be worth nothing to them and not really benefit them, how can you intervene and how can you assist in this particular situation? And a testamentary trust is definitely something you should be looking at in order to do that. So if you need to explore benefits of a testamentary trust and you feel this is a pathway that you'd like to explore, make sure to book a call with one of our strategists. It is simple and easy to do and costs nothing, and there is no obligation. You simply go to our website, wowwomen.com.au, and click the link to our programs to book that in for yourself. If you found today's episode particularly helpful, please share it with a friend, leave a review, and don't forget to subscribe so you never, ever miss an episode. But until next time, take control of your finances and your wealth and your future.